Guys, Bitcoin has been on a bullish rampage over the last few months, and now today we are looking at the theory of a pre-halving correction. And unfortunately for the Bitcoin bulls, the evidence just stacks higher and higher and higher. I want to make something very clear. I'm very bullish on Bitcoin on a long-term scale, but I'm also understanding that from a charting perspective right now, it would make a lot of sense to see a pre-halving pullback. We've got new evidence today to look at. We've also assessing the old evidence as well. Ladies and gentlemen, without further ado, we're answering the question today: is a pre-halving correction likely on Bitcoin? And what will it look like if it is? Let's get into it. Guys, I've found some more similarities, as I mentioned in the introduction, from this period of time to 2019, and they're pretty shocking similarities. They're shocking similarities coming from things like the Bitcoin dominance chart and the already discussed monthly chart Ichimoku Cloud baseline. So we'll discuss those further in this video. We'll also discuss how Bitcoin and Ethereum are on the verge right now of seeing a potential short-term breakdown. They are currently on pretty major support, but if that support goes, the whole structure is going to come falling down essentially. We do obviously still have a chance of breaking to the upside in Ethereum and Bitcoin, which is interesting. We'll need to look into that as well. But just a few charts to discuss today. We'll try and keep it short, but new information being proposed here today, but I think reinforces points I've made in previous videos and perhaps gives a new perspective on them. So let's get into it. Now, in yesterday's video, we made the claim that it would be favorable if Bitcoin closed under 42,000 at the end of the month and the end of the year, since it's December. And I'll stand by that claim. Now, if you want a full analysis on that claim, you want a full description of that claim, you better go watch yesterday's video. But I'll briefly analyze, I'll briefly kind of go over what I said in yesterday's video for various reasons. Including this chart here, the Ichimoku Cloud baseline on the monthly chart. I suggested that closing the month below 42K would be favorable for Bitcoin because it would give Bitcoin, it would maintain Bitcoin's long-term cyclical predictability to a greater extent than closing above 42K would. Of course, closing above 42K would be good from a price perspective because we'd be above the resistance zone, we'd be able to go upwards. But overall, I would argue, and I did argue in yesterday's video quite successfully, I think, that maintaining long-term cyclical predictability is going to be more important than short-term moves to the upside, because when you move to the upside, most people don't even make money anyway. But people do make money from being able to predict exactly what's going to occur because there's strong trends that back the scenarios that you're predicting, right? That's how you make money. Predictability is basically free money. The price moving volatilely in certain directions, it might sound good on paper, but in reality, most people just get faked out anyway. So we actually want Bitcoin to remain as predictable as possible on a cyclical level. And in doing that, we want similarities from 2019 to be replicated in this cycle. And what we're seeing is the Ichimoku Cloud baseline highlighting a potential scenario that could be repeating right now. And that scenario, as you can see, first and foremost, the Ichimoku Cloud baseline is a very definitive support resistance zone on Bitcoin. Whenever we're above this thing, we're in a bull market. Whenever we're below it, we're in a bear market. I mean, this has been the case for the entire lifespan of Bitcoin. But right now, if we're looking from a 4-year cycle perspective, what we can see is that we are in between cycles right now. We've seen the bull market, we've seen the bear market, we're in between. We're in an accumulation period, and after the halving, we'll see the next bull market, just like last time. And we're at the same part of the cycle last time that we were at in 2019. And you can notice that in 2019, we were also testing the Ichimoku Cloud baseline. We wicked above the baseline, but ultimately we closed below it, and we saw a correction before the halving. It was only after the halving that we started moving upwards rapidly to the upside. If we're going to copy 2019, which would be favorable because that would maintain Bitcoin's long-term cyclical predictability, we should be closing below 42K this month, seeing a correction for a few months after that, and then breaking upwards above the Ichimoku Cloud baseline after the halving to see our bull market. That's what we should be doing, just like in 2019. It is worth noting that in 2019, the drop was exaggerated because of COVID. It could have lasted until December, which would have been over here. We would have broken up there instead of a few months later. So it's not as bold a claim as you might think it is. But I think that, yes, it would be favorable if Bitcoin closed below 42K. Not only favorable, but from a perspective of macro TA, it's actually quite likely as well, in my opinion. It's the more likely possibility. I've mentioned before, I'll mention again, the only complicating factor is the ETF decision. But the ETF decision won't be approved or denied until January 10th, most likely. They'll probably try to delay it as long as they can. And so that shouldn't be a massive concern within this monthly candle, but it could be a concern for next month. But we'll cross that bridge when we get there. At the moment, we can trust the charts. And the charts do suggest that actually, look, we're copying something like 2019, and that would lead to a rejection at 42k, lead us to go down for a few months, correct after a massive move to the upside, and then go upwards after the halving. You have to remember, right? I think people are. I've kind of maintained this opinion for quite a while now. I think people are getting a bit greedy at the moment. We've seen a move to the upside on Bitcoin, basically 80% in a 3-month period with no significant correction whatsoever. And so to act like correcting here would be ridiculous and absurd. It's absurd in itself to make that claim. Of course it's necessary. Of course it's possible we see a correction here. But I'm also understanding that there is a counter-argument to that point. And after we describe this counter-argument, we'll get into the new analysis we need to do. Well, obviously we have exhaustion in the trend. We have volume showing clear signs of exhaustion, descending volume throughout the entirety of this upwards trend. We have this upwards trend in sheer quantity of moves to the upside without correction showing exhaustion. We have things like RSI reaching a red rejection line with clear bearish divergence now for about 2 months showing exhaustion. But we also do need to consider that, well, given the fact that this upwards trend has been showing exhaustion for such a long period of time and yet continued to move upwards, we have to understand there is a possibility we could just continue to move upwards again and ignore the TA and delay the process until we reach 48k. I've stood by the point for the last few weeks, and I'll continue to stand by the point. As much as I think a correction is the more likely scenario, I do understand there is a possibility that Bitcoin could surge to 48k before seeing that correction, because I do understand and I do respect the fact that the next major macro resistance is 48k. We look at the volume profile, we can see the next spike in the volume profile stems from 48k. So from a macro range perspective, 48k is the next step. I understand that. I don't think it's likely, but I certainly think it's on the table. It wouldn't surprise me if it did occur. And with that said, we can start to discuss the short-term TA. We can start to realize that, okay, look, the downside scenario is not certain. With that said, we do need to understand where we are. We're kind of in some sort of triangle formation right now. We've got this ascending support line. We've got this pink resistance line. Until we break down from this ascending support line, I'm not willing to be fully short-term bearish. Until we break up from this resistance line here, I think being bearish is the logical option. Again, I'll explain that one more time. Until we actually break down and confirm a short-term downwards trend, I'm not going to be short-term bearish, right? I'm just going to be leaning bearish. But until we break upwards, I will be saying that leaning bearish is the most logical decision. Hope that makes sense. The point is we're showing weakness right now. I'm leaning bearish. I think the bearish scenario is more likely, but I'm not actively in short positions because we haven't actually broke down yet. And the same reality can be shown in the RSI. We've got this RSI triangle formation that's been forming for two months now, a bit over 2 months. We're actually on support right now. Now, we could very easily go down close below that support. We could just as easily bounce upwards again, right? So it's one of those scenarios where I'm confidently, in terms of my actions in the market, buying, selling, whatever it may be, I've got a long-term Bitcoin bag, of course, but in terms of short-term movements, I'm actually on the fence right now. I'm not doing anything. And when we see a breakdown from this RSI formation, that's when you'd be entering shorts or being actively bearish. And yeah, that's very clear in my opinion. I think the same reality can be reflected on Ethereum. In fact, Ethereum shows exactly the same thing. We've got a red support line, which we're on right now. We haven't broken that down yet. We've got a yellow ascending support line. And we've got an RSI triangle formation just like Bitcoin. And also just like Bitcoin, is on support. If that breaks down, which could be tomorrow, it could be in 3 hours, right? Then cool, we'll flip actively bearish. As I said, I'm leaning bearish right now, but I'm not actively bearish because we haven't seen an active breakdown. I mean, that's just logic, right? It's common sense. But with this said, I think I've analyzed the short term to a certain extent, and hopefully by tomorrow we'll see a breakdown, right? Then we can analyze it more actively. If we do see a breakdown, of course, our next target is going to be something like 38k, 39k. That's where our major support is. That's very well established. But we'll have to analyze that breakdown when it actively occurs. At the moment, all we can do is understand, okay, short term is a bit of a waste of time. We can understand scenarios, but active predictions are a bit of a waste of time right now. Medium term and long term specifically is quite interesting because we know what we need to do. We need to close. We don't need to, but we very much want to close below 42k. And we can support this case even further by looking at something like the Bitcoin dominance chart. Guys, this is the Bitcoin dominance chart on the screen here. Bitcoin dominance is a chart that very much, as per the title, it displays Bitcoin dominance in the market. It's a percentage format measured chart. Right now it's at 53%, meaning that 53% of the total capital in cryptocurrency as a whole is in Bitcoin, and the remaining 47% is in altcoins. So when this goes up, right, it means that Bitcoin is gaining dominance in the market. When it goes down, it means that altcoins are gaining dominance in the market. You can utilize this very, very much. I think it's one of the most important charts in cryptocurrency to basically tell you when you're meant to be in altcoins and when you're meant to be in Bitcoin. We know very much, very clearly that during bull markets in the market, right, we're meant to be in altcoins because Bitcoin dominance plummets. And during bear markets, we're meant to be in Bitcoin because Bitcoin dominance skyrockets, right? This is what we've seen over and over again, right? And we're seeing it this time as well. We're in a bear market right now. Of course, we're moving upwards. So the word bear market it's a semantic term. It doesn't actually describe the situation accurately, but for the sake of 4-year cycle, let's call it a bear market. And given the fact we're in a bear market, we're moving upwards massively in Bitcoin dominance because people are flocking to Bitcoin for safety, more or less. They're looking at altcoins being destroyed over the last 2 years. They don't like altcoins at the moment. They want Bitcoin instead, and hence Bitcoin is outperforming altcoins. This is why I've been a massive proponent of being mostly in Bitcoin since the 2022 bottom. And that opinion that I've had has been very well reflected in the data. Bitcoin dominance has surged 14%. The vast majority of altcoins have underperformed against Bitcoin. You would have been better off having Bitcoin than you would have had altcoins on a generalized scale over the last 12 months, 14 months. And so right now what we're seeing is a kind of short-term topping formation on Bitcoin dominance, similar to what we saw in 2019. You can see in 2019, the bear market wasn't over yet, okay? But we saw Bitcoin dominance reach a top and actually start to go down for an extended period of time. Now, that drop, of course, was extended by COVID-19. We shouldn't have seen that big of a correction. Realistically, if we look at 2019, the top occurred on Bitcoin's price over here in June. That lined up perfectly with a top on Bitcoin dominance in June. But we saw the bottom of the Bitcoin price here in December, and Bitcoin dominance similarly should have bottomed out in December over here, right? So we should have seen the drop basically be a correction on Bitcoin dominance of around, let's see, 7 or 8%, which would have been significant, but it certainly wasn't significant compared to what happened in COVID. Now, in COVID, obviously it ruined everything, but it was a black swan event. We can't really take it into consideration. The fact of the matter is this period of time here, this short-term correction we saw on Bitcoin dominance there's an argument to be made. It's what we're seeing right now. We're seeing an ascending wedge formation, just like what we saw in 2019, although on a much larger scale, right? And we could be seeing a significant correction on Bitcoin dominance downwards to something like, let's say, 48 or 49, right? And then we'd go upwards from there until maybe the end of next year, until the bull market starts, and then we'd start to go downwards properly on Bitcoin dominance. That is what would seem logical to me. And that is what would seem consistent with the previous times in the cyclical theory, the previous times in, prior cycles. Now, the reason why this is interesting is because if we're looking at when we topped out on Bitcoin dominance before starting that correction in 2019, we actually topped out at the same time as Bitcoin itself topped out, which was the same time we reached the Ichimoku cloud baseline, right? Which is what we're suggesting is going to happen again. We're suggesting that we're going to reject just like what we saw in 2019, right? And go downwards for a few months until after the halving, then go upwards for the bull market. That's what we're suggesting is a very possible scenario for Bitcoin. And now we've found another similarity in the charts, this time of Bitcoin dominance charts, supporting that theory. It's quite interesting. So I hope I've made that clear enough here, but essentially what I'm pointing towards is another piece of evidence that we're copying 2019. And if we are in fact copying 2019, again, we will be going down for a little while from this 42K monthly close below the Ichimoku cloud baseline. It's quite interesting to look at. But at the same time, I am acknowledging, while I'm saying all this is all from a charting perspective. I do have to acknowledge as well that there are some fundamental differences this time on Bitcoin and the cycle in general, right? ETF is one of the big differences. ETF being approved on January 10th could dramatically throw this off. But at the end of the day, we can't really bring too much weight into our decisions, the fundamental news in regards to ETFs, because the ETF's fundamental news is just speculation at the end of the day. We don't actually know what's going to happen with ETFs. They could be approved, they could be denied. Yes, it's very likely they're approved. But more importantly, we don't know what the result of the ETF decision is going to be. I've repeated this many times, I'll repeat it again now. The vast majority of people who are interested in the ETF decision have already bought Bitcoin front-running the ETF decision. That's just logic. That's common sense. The fact of the matter is this move in its entirety has probably been a move to price in the ETFs, right? ETFs, when they're approved, are not immediately released into the market. The buying pressure that will come from ETFs will come in the long-term scale, not immediately. There's no one sitting there immediately ready to buy their ETF, their Bitcoin ETF on the immediate announcement of the approval, because the approval doesn't mean the instatement, okay? The instatement of the ETFs will come later after the approval. So the immediate short-term effects of the ETF approval could very well be a sell the news event, because everyone is interested in it. in it has been interested in the market over here, and everyone who is interested in it has bought already. So there'll be no more buying left to do. That's a possibility. We also just could go upwards, right? The fact of the matter is we don't know. So this is what I mean. We can't take the ETF scenarios too seriously, and we can't let it overly dilute our view of a TA. We have to remain vigilant on the TA. With this said, again, there is a possibility that Bitcoin does just ignore the TA, go to 48K, doesn't close below 42, and goes upwards. At the end of the day, it's not a established cyclical trend that we should reject from the baseline of the Ichimoku cloud every bear market. It's just not a trend. It's just a similarity between now and 2019. It's not a confirmed trend. So it's hard for me to sit here and say that I'm very, very confident it's going to occur. I'm certainly not, but I'm outlining it as a possibility, and I'm saying that I would actually like it to occur because I want new trends to be formed. That's my opinion on Bitcoin, guys. I hope you enjoyed the video. Go ahead and check out the VIP group on Telegram. We trade altcoins on VIP. We give you entry signals. We give you suggested stop losses and take profit. You also get access to a 24/7 VIP group chat where people are discussing Bitcoin and the market 24/7. So it's a good place to share your ideas and get information, get feedback in your ideas in there. The VIP group down in the description below. Bitget and Bingx exchanges are my favorite exchanges for cryptocurrency. If you want a place to buy and sell Bitcoin, trade derivatives, trade spot, whatever it may be, these are the ones that you can get access to with my referral link for a 15% trading fee discount. Bingx is global non-KYC. Bitget is global minus the USA KYC. Take your pick there. Very low trading fees. Then we've got the Crypto Academy, Become a Trader 10-unit course, teaching people how to trade in a 10-unit course format, university-style format, videos, slideshows, worksheets, trading diaries, everything you need is on the course here, including the contact details on the website down below. For any questions you might have, we will answer them swiftly. Thanks for watching, guys. Hope you enjoyed, and I'll catch you tomorrow. Cheers.